Our first speaker is Mr. Vaidyanathan, who indeed doesn't need an introduction for the financial world. He has been one of the most dynamic bankers around. We have seen how, as a young banking professional, he was on the board of ICICI Bank, I think when he was just 38 years old. Thereafter, the entrepreneurship bug bit him, and he went on to start the highly successful firm Capital First. And now he is the MD and CEO of IDFC First Bank, which is next door. So it's quite convenient for us to drop in for a cup of coffee to his office after this. So I don't think, we can have anyone better than Mr. Vaidyanathan to open this particular event for us because of his long experience in bringing, the latest personal banking trends into the areas that he has been working. I mean, he has been associated with his entire banking career, with the customer interface. And I think he's the best person poised to talk about how to make use of the disruptions in the banking sector to really touch the lives of the common man. Over to you, Mr. Vaidyanathan.
Good morning, ladies and gentlemen. It's really a pleasure to talk to you this morning. And Arun, thank you for introducing me to the audience and for inviting me today. The publication India Today coming up with this concept of Smart Money Financial Summit. I'm conscious of the audience for this segment, not just this audience sitting here, but even the readers of India Today. When I think of that segment, it is not necessarily that everyone is really very up and running in the financial services world and knows all the terms and technologies and terms. So I'm trying to speak in a way when this finally gets published, the common reader can relate to it. So think of it, that's the context of this talk. Now, when we think of digitization and disruption, so to say, in financial services, which is the subject given to me today to speak to all of you. Now, sometimes people tend to think of disruption as something negative, like disruption on the road, traffic got disrupted, or telecom services got disrupted. So sometimes think of a bit of a negative connotation to it. But I would like to share with you that in the financial services space, with the use of all the new technologies and the new number of ecosystems coming up in the country, with telecom and banking systems and new technologies and generative AI and blockchain and hyper-personalisation and many such new technologies that have now come, disruption is a good word. And that's the point I wanted to leave with you. And it has a very, very positive impact on the financial services to the common people of the country. I'll explain why, how. Now, think of, not very long ago, if you got a statement of account from a bank. You have a bank account, fine, you'll be some debits, there'll be some credits, you'll get a statement of account. So what would you get? First, there were passbook, maybe 10, 15, 20 years ago, and then it became electronic statements. But that statement doesn't give you much. It just tells you these debits happened, credits happened. But the value of digitization comes when that digitization is used to create insights. And insights are a level, a value add level above information. So, for example, you could get a statement of account as usual, but a bank can now analyze the statement for you, which could not be done in the physical world. Bank can analyze for you and say that this month or this quarter, you spent so much money on household goods. You spent X amount of rupees on groceries. You spent during this year so much amount on travel. You spend so much money on donations, or you spend so much money on investments, you spend so much money on EMI. Now, out of hundreds and thousands of transactions, if someone analyzed all of them, put them together, send you a summary at the end of the month or end of the year or end of the quarter, that's value add. That's so different than giving a statement of account in a passbook. So, moment you moved it away from a physical paper to a digital statement and analyzed it, there's value. So that's one very simple example. Now, what we have done in IDFC Bank, we've got a new bank, and we always wanted to use technology to find some extra value for customers. So what I'm telling you is not just academic. So we started a capability on our app for customers to come and analyze and tag every transaction. You could tag this as a grocery. You could tag this if you paid a particular vendor and you tagged that as a travel agent. The next time the same transaction happens, system will pick it up. System will know it's a travel agent and put it in the auto categorization module. And end of the year, end of the month will give an analysis. So the value add. The second thing is that advice. When it comes to financial advice, if you notice, the traditional way of doing financial advice is that people would go to maybe the chartered accountants for some advice, or people would go to maybe certified planners, maybe estate entities, or maybe family friends and take some advice. Now, those advice are only, many of them are well-meaning, but they're also limited to the extent that you need to have a certain amount of corpus before they can offer you that advice. Even banks, end of the day, if you keep 20,000 rupees or 10,000 rupees with the bank, and the revenue the bank is making from you is really very low, and it's probably just measuring off the cost of giving you that service, even banks can't afford to give you a relationship manager of 10,000, 20,000, no matter what bank will tell you what. Not possible. But therefore banks will say, if you keep 20 lakhs with me, 30 lakhs with me, 40 lakhs with me, then I'll give you a relationship manager, right, or something like that. And then I'll give you financial advice, I'll give you wealth manager, or something like that. So therefore, in this example, what is happening is that value or advice or quality advice, again like the case of the certified planners example, is going to a certain set of people who have the necessary critical mass. Now what about the common people? What about the common people? For common people also, money is money. For us, maybe 1 lakh is wealth, but maybe for that person, 10,000 is wealth. Right? And that person also needs this advice, but nobody can afford to give it to them. Then again, the digitization comes as a role to play there. Why? Because the critical mass at which system can give advice is much, much lesser than the critical mass for giving a human advice. Human costs money. Relationship manager costs money. Banks can't afford it below a particular critical size. So I'll give an example. So now since everything is digitized in the example I'm giving, today, if you know that India's moved to an open banking ecosystem. In open banking ecosystem, what really happens? In open banking, you may have heard the term, but sometimes people think that freely transferring money from one bank to another is open banking. That's not open banking, just to tell you. Open banking is, and India is becoming a pioneer in open banking. And what is open banking? Open banking is that it is a way whereby banks can, with the consent of the customer, share your information to the next service provider, financial services provider, or bank. For example, if you, in open banking, think of it, there are a set of banks, and they all have a technology service provider. You're a customer. You're giving a consent to the bank and saying, okay, I'm okay for you to share my information, all digitally only, with this technology service provider. And the next service provider to you, supposing you're taking a loan from somebody else, some other bank. Now that bank can take your consent, access your all other bank information, and then take a decision on giving you a loan. So in open banking, this is possible. Now it's an open architecture. Now, coming back to the earlier point, now through the open banking architecture, any service provider, say our bank, can access your bank information with 5 other banks, know how much balances you've kept there, what are the transactions happening there, analyze it together for you, and then say that, you've been getting total inflow of X thousand rupees a month, say 40,000 rupees a month. you've been spending, say, 15,000 rupees a month. So you're, or whatever, say 25,000 rupees a month. You're saving, say, 15,000 rupees a month. The total investments you have is X. The total loans you have is Y. So we know all the stock information. We know all the flow of money information. And then we can say that we could figure out how much investment you've done in mutual funds. So then bank can combine all this information together and give you good quality financial advice. Now, what has happened is that not only because it's a power of digitization, we can give you quality advice at bottom of the pyramid, but can also be more precise advice. It's more precise advice because it has consumed information from everywhere else through the open banking architecture. So this is a second big advantage of how digitization is playing an effect in the common people's lives. To you, therefore, it means more personalized financial advice, which could not be provided earlier in the human-supported architecture because human beings are expensive. Technology is also expensive, but technology can be scaled up to millions of people to provide services to the common people. Now, the third thing that value add, I started the meeting by saying, what is the value add technology is doing to make your life efficient? I gave you example of how statement of account can be analyzed. I gave you example of the other one, open banking or financial advice. The third factor of where technology can be of really good use to the common people is goal-based investing. Now, many people know that, supposing 10 years from now, 15 you're 55, assuming at 65 you want to retire. Now, the truth is that awareness of retirement is low in this country, or retirement planning is low in the country. People keep putting it away to the last minute, and then they panic at the last minute, and that's a real issue. And I hope awareness also goes up. But assuming awareness also went up, the tools didn't exist. But I'll give an example of how a tool can be provided with the banking system to you so that the digitization and power of digitization can be made to be brought to good effect for you. I'll give an example. Now, supposing you're 55 and you think you want to retire at 65, just making it up. You have 10 years. Now, you might scratch your head and say, okay, I think I need, for my current level of income, I need about, say, 2 crore rupees to retire. So you go to the system and tool and say, I want 2 crores 10 years from now. Now, system will first of all tell you that, listen, friend, this 2 crores will not be worth 2 crores 10 years from now. You will probably need 3 crores. Okay? Index for index, maybe 4 crores. Index for inflation and cost of money. Now, okay. Now you'll say, okay. System will then say, by the way, to get 4 crores from now, 10 years from now, you need to be investing 2,10,000 rupees per month starting now. So this number was not available to you in the normal course of life. Now you know, system will throw it to you. Then you say, okay, fine, I'm willing to pay 2 lakhs a month. But what do I do? Where do I start? Again, technology will come to your rescue because the system will say that, okay, I believe that this is your last maybe 10, 15 earning years of your life. You should not be taking too much risk. Maybe you should be putting 10, 40% of the money in debt equity funds and maybe 60 in equity. Let us assume that you consumed that advice. Then system will say that, listen, in equity, now there are 1,000 mutual funds. We all agree, chalo, mutual fund sahi hai. Campaign is also good. We also agree also mutual fund is good. We all agree with everything. But how do you start? By the way, I've had this conversation with many people. How do you start? Mutual fund. If you go, there are hundreds of schemes. This is growth scheme, this is blue chip scheme, this is startup scheme. Now you have to scratch your head. Now the system can go and analyze all the funds and suggest to you that as per our research, these top 10 mutual funds are very good for investing. Solution has been provided. This is different than saying that you shouldn't invest. It is like giving you gyan. You should invest in mutual funds. Ab kya karoge iska? But to say, boss, India mein 100 fund hai, lekin ye 3 fund bahut achhe hain. It's value add. System can give it to you. If we depend on a wealth manager, relationship manager give you, they can only reach X number of people, I told you. It's not viable. But system can make it mass available. Okay? Then if you say, I want to see what is inside this mutual fund. Then through an API, system can immediately access that information, what is lying inside that mutual fund, and tell you this is the 10 companies inside that fund, or it's the 20 companies inside that fund. Then you say, I want to know what is the proportion of each of these companies inside this fund. Then system will say, these are the 10, companies. This fund holds 5% of, fund is ICICI Bank, 4% is Unilever, 3% is Maruti, etc., etc. So you say, look at it, it's okay, fine, looks fine to me, I'm happy to go. So, and then you click the button. Now what happens next? Now, when you say you've got to invest 2 lakhs per month for 10 years in that example, system will also compute for you that out of 2 lakh rupees, you should be investing so much in this fund, so much in this fund, and tell you by name. You only click, accept it, and go ahead. So, this is very different than giving general advice. This is very specific advice, research-based. Now, supposing you say, no, I don't like this research because why should I trust you? Maybe you guys are getting commission from that fund. I want to do my own research. No problem. You say, okay, you do Morningstar rating, select the top 3 funds, no problem. Or you do top last 3 years performance, take it, no problem. But last 3 years top performing fund, last 5 years, you do your own research if you want to. This is the example I'm giving you of how technology, instead of giving you general gyan, can also give you very specific advice on how to plan your retirement in that example. Similarly, supposing you want to buy a car and you don't want to take a loan, right? Many people just don't like to take a loan and should not if they don't have to. So therefore, you can say, okay, I want to buy a car 2 years from now and I want to buy a 8 lakh rupee car. Fine, system, it's okay. If you want to buy 8 lakh rupee car, then you should be investing, say, X rupees per month, and then same logic will tell you which funds to buy, and you can choose, you can agree, not agree, whatever. The point when it says that, again, you can do goal-based planning in making, which technology will enable for you, and human advisors cannot because they're not viable. And this is a very big factor. The other big factor of value add to people in society at large also is also how much paper is required. I can tell you when we were giving one of our loans, we counted the number of paper we were using in a microfinance loan. But just microfinance loan, 50,000, 30,000 rupees. 28 pieces of paper were required to give one microfinance loan of 35 to 40,000 rupees. 28 pieces of paper. Now, in the similarly, we were giving out some loans for small entrepreneurs, micro entrepreneurs borrowing 3 lakh or 4 lakh rupees. We were using 22 pieces of paper for giving a 3 lakh or to 4 lakh rupee loan. In the digital ecosystem, now what is happening is that our people are going with a tablet, they're meeting the customer, suppose they're meeting a restaurant. So they asked, earlier they were asking the restaurant, show me your paper, show me your income tax document, etc. Which they still have to ask. But what they do is that they tell you, okay, what are the daily sales here? Give me a menu card. What is the average balance in the menu card? Average ticket size of the menu card. Because if a high-end restaurant, the average menu price will be higher, and lower-end restaurant, average menu price will be lesser. So we put the information. Then we check whether the owner is sitting in the restaurant or the employee is running is restaurant. So this kind of information is put on a tablet, not on paper. And like this, you carry this information. This information is digitally, you ping credit bureau. You digitally ping and get the PDF document of the bank statement, which you were taking physically earlier. Now you take it through PDF. Now the analysis of this is not done on an Excel spreadsheet and printouts, etc., because machine is reading it, and machine does the analysis of average balance held by the customer in that window. Then, after doing this work, the machine is telling us that then it can do certain fraud checks about the customer all digitally, or probability of fraud. Then there are certain references you can check with maybe with the MCA site or any litigation against the borrower all digitally. Everything is done digitally in this new ecosystem, in the examples I gave you. Now, after doing all this analysis, the decision is also taken digitally. When the customer is ready to give a loan or take the loan, the sanction is also shown like this digitally, or emailed, or even shown on the tablet. Now the customer says, okay, I agree with this loan amount, I agree with this interest rate, I agree with this EMI, I'm happy to pay. Then we say, okay, I'm sending you a link. Agreement also is signed digitally. Okay, since we use any of the technology partners who do that. And then the document comes back to us. And then we disburse the loan also digitally. So 22 pieces of paper in that 3 lakh rupee gone. Can you imagine how much of ESG benefit it is? And when you multiply the 22 pieces of paper into 1 million loans, then you're saving 22 million pieces of paper. It's a lot. Initially, 22 doesn't sound very big to you, but it's a very big number. That many pieces of paper gone. So there are multiple benefits in the form of ESG, paper, cutting of trees, and value add, and making financial services available to the lower end of the pyramid in as effectively, sometimes, in fact, even more effectively than what you can give to a human being in person. No matter how qualified a person who are giving personal advice, they also cannot compute as fast as a computer can. So, and in fact, sometimes more effective than even physical relationship managers. So this is the big value of so-called disruption, which is a subject which you want me to speak about, Arun, today. There's a value of this disruption happening, if I call it disruption, if you want to call it so, but I actually call it enormous value add that is happening to the system because of power of digitization in the common man's life, like the many examples I gave you before. So the last thing I want to say with you is that there are our own organizations and banks, etc., also can do better. You know, this is just a start. We can do the focus, at least our bank is value add, solutions, not information. If you came to our app, by the way, put up a really good app. You know, why I call it really good app is not because it's, nice design and look, etc., which is, that's not the point. We have put a lot of effort behind the design and the quality of the journeys, etc. But I call it good because of the solutions. So we don't come and see your statement of account. वो तो वैसे भी कर लेंगे. वो तो just digitized paper into. But to give customers for financial planning, that's value add. To give financial goal planning, that's value add. To give customer loans within maybe 20 seconds, 30 seconds, just without using paper, that's value add. Giving good financial advice or even financial literacy programs, that's value. Though we have not yet built on our app, we have a plan for that, but that's value add. So we are continuously working. We also have to continuously better. We are really putting effort behind it. We think about it all the time. But these are the examples of what I want to bring to you of how digitization, not disruption, but digitization is adding value to the common person in the country. So thank you very much, ladies and gentlemen. Yeah.
I think that was a very wonderful kind of presentation and eye-opener towards the digitization efforts that is happening in the industry. I think that is the biggest disruptive force. And I'm sure that, all of us have maybe a few questions in our minds. So if there is someone, who would like to ask a question to Mr. Vaidyanathan, please raise your hands. We can have a quick couple of questions and then, we can, there is a gentleman there.
Hi, sir. By the way, I'm a big fan of yours and IDFC Bank and the banking system in India anyway. But I have two big complaints. One, I think most of the people will have similar to mine. The one is I get a message like 50,000 ka loan le lo. A lot of messages, but then personalization is missing. My second complaint as a techie, we're not creator of AI. And Microsoft, OpenAI, Google, all are looking into plethora of this data. How do you take it? Like, why can't Indian banking system be creating AI, creating data, owning data?
See, 100% you're right. We have to get better personalized. Okay, and that's a short answer to it, and it's a continuously evolving process. At least at our bank, we are really putting an effort for it. We have actually developed a capability of something called hyper-personalisation. Hyper-personalisation is to make you an offer at the time it is relevant to you. For example, if there's a customer who's been getting a monthly salary of say 50,000 rupees per month, suddenly the person gets say 3 lakh rupees in the account, and that too coming in April. Then this money has come probably because the person earned a bonus. Then instead of money lying in the account at 3 lakh rupees lying there and earning the customer say 3 or 4%, and maybe at that time go and give the customer a solution saying that because system throws a trigger that customer's got a balance of, so go and give a customer a specific value at point of time that look, you might want to make this investment, these are 3 options for you. That's hyper-personalization rather than shooting offers. So we are we're getting better at it. I'd say that at least our bank, I think, is making serious efforts. Hey, Rajiv. What's the second question you said?
Why can't Indian banks be creator of technology? Why only user of technology or owner of data?
Yeah, I mean that's true actually. But you see, we are using the ecosystem. Okay, our feeling is that the India has created really amazing ecosystems and transformation that never existed even 5 years ago. Where was open banking 5 years ago? It was not there. Where was account aggregator 5 years ago? It was not there. Where was even financial planning 5 years ago in a serious way? Even now it's not great, but at least it's making its initial stages. Supposing you want to make an investment into gold. Now, you think gold means I have to go to the shop and buy gold. It's not like that. Because now e-gold is available. Sovereign bond, gold bonds are available. All purchasable by... So again, making it available to the right person at the right time through hyper-personalisation is something we work on. Yeah. Yes, sir. Yes, sir.
So, a huge fan, Vaidyanathan.
Thank you.
And shareholder of IDFC First Bank, account holder, multiple account holders of First Bank. Great app. I mean, everything is perfectly all right. My one question to you and everybody else who's present over here from the financial fraternity is this. When will this KYC mess end? How many times do I have to give my PAN number, my Aadhaar? My PAN Aadhaar is already linked. I have a driving license. I have a passport. The address in all the passports and all the document is still same. But every 2 years, 3 years, banks want me to come physically sign a form in front of them. What about ESG? Thousands and millions in pieces of paper are just getting, I don't know what. I mean, is there a Bhangar site somewhere where they collect all this paper and then sell it and make money out of it? When will this mess end?
It's frankly, let me just say that it is a very important and serious issue you raised. Because every time you give a photocopy of a KYC, we cut some tree somewhere. And we feel it. Some tree has been cut somewhere. Well, the good thing is now you can move everything to DigiLocker. And hopefully you can tell your bank next time, here's my DigiLocker link, take it from here. And we should do better. We should do better.
I have a question for you. Yeah. In fact, I think all of us listening to your talk take home one very crucial area, which is that the efforts that banks are putting in, I mean the leading banks are putting in, to ensure that there is much more financial literacy and also the digitization efforts which will make it much more easier for people to plan their future better. I wanted to ask this, when you talked about open banking,
yes,
and you said, we are a pioneer in that.
My question, the country is
a pioneer.
Yeah.
So I just wanted to understand, the kind of efforts that you are doing to proliferize this, because there is still a lot of questions in the minds of consumers, regarding the adoption, and there's a lot of skepticism around.
See, Arun, every technology has the concept of the slow adopters and then the early adopters, and it really takes off. This open banking is very quickly catching up. Because India has developed a really good architecture thanks to Reserve Bank of India and thanks to the efforts of government and thanks to developers ecosystem developed. Now, people are coming, if they want a loan, they click, they give access to other accounts because they can see value. Wherever people see value, they will adopt a technology. And of course, when it gets critical mass, it grows. But I can assure you that this is growing very fast.
Okay, thank you so much, Mr. Vaidyanathan.
Sir, respecting your marathoning skills and finance skills, a unique combo. Lucky for all of us.
Thank you.
Congratulations.
Thank you.
I'm talking very simple but very hard-hitting basic questions, sir. Telecom is under government, banking is under government, and all digital cyber police and local police is under government. Can banks, telecom companies, and government own some ownership at some point of time for cyber frauds and cyber crimes which are growing galore?
I think, I don't remember the number offhand, so 191 or this 3-digit number, where 19? 1930, where citizens can call and say, this has happened to my account. There is some central authority which is then connecting the telecom companies, the banks, and they're figuring out that money has gone from X bank to Y bank to Z bank, catching the trail, blocking the money. And that service has started. So therefore, there is, let me say, a considered effort from the government, but our own, over time we have to do better. Talking of digitization, one of the other conversations, we find that with all the benefits of digitization, one of the downsides or one of the limitations of digitization is that there is always some bad actor sitting there who's trying to also hack to the process, and that makes it that much more important to address that issue.
Okay, thank you, Mr. Vaidyanathan. It's time for the next session. We have already the esteemed speakers come here. I think a lot of you know Mr. Vaidyanathan so personally that he's also a marathoner. Someone was mentioning it. He's completed 38 marathons. So I think there is still a lot to come. So wishing him all the best in this long race that he is in. Thank you so much for your presence.
Let me correct that. Make that 32, by the way. So
the banker is always precise.
On a lighter note. But anyway, but anyway, thanks very much to every one of you, and for many of you who even said any good words. So thanks for that. Some of our colleagues are here, Chinmay and all. So if you felt any of the questions are unaddressed because of the shortage of time, you can just reach some of them here. But thanks very much, and anything that we can do for you to make your experience better, let us know. Thanks a lot.